Hi, Ashwin.
Oh,
We're on TikTok. I wanna ask you about this movement of money. So I read that the Bank of America reported that investors have poured $3.8 billion into technology stocks in the week through May 10th, the largest inflow since December of last year. Since December of 2021, and pulled 2.1 billion from financial equities amidst the biggest redemption since May 2022, amid turmoil among regional banks in the US.
yeah, see, I'm not all that surprised by this. Now, if those of you watching this video will recall, while the NASDAQ was dropping, we assured our investors that tech companies had the most money compared to all economy companies, and that investors should take advantage of chaos to buy. And we said at that time, even last year, that sooner or later, the Fed is going to stop raising interest rates and investors will buy tech companies because the valuations get lower and you will see value for money. And that moment is now happening. Okay, whether it lasts or not is not important. Important is when the valuations drop, it's good for you to buy high quality companies. Stick with quality.
So there's this rush to buy tech stocks. And at this point of time, when markets are so uncertain and dependent on the Fed, interest rate hikes and so on, what is the best thing that we investors should do?
We have a strategy, Jesse, in place that will get investors the best of both worlds. Let me explain. A managed fund, which trades FX and gold volatility, not market direction, meaning they go up and down, the fund makes money. This managed fund pays a base case of 8% per month, which translates into 2% per week. Now, over the last 4 weeks, just to show viewers, our clients have made 9.44% in the last 4 weeks from this managed fund. And that translates into 2.36% per week.
This is unheard of. In amidst this situation, how is this possible?
Let me stress, they do not trade stocks. They only trade FX and gold volatility, meaning as long as it moves up and down, they make money. They do not trade market direction. Now, the second way is a staking fund that pays 1% per month, which translates into 0.25% per week. So that means if you participate in this scheme, you get a cash flow of 2.25% per week in US dollars.
So one is a managed fund, the other one is a staking fund.
That's correct.
And it's like almost mind-blowing, Ashwin.
Okay. So after you put this 2.25% every week in the bag, the third way is for you to invest in quality tech companies. I say again, do not care about what the market does short term, because, for example, Microsoft, it has gone up $80 a share, $90 a share over the past 12 months. So there's no fear. If you know what you're buying, if you're buying quality, literally, Tessie, the Fed can go to hell. You just buy quality companies and sit down. We could easily build you a portfolio of 7 to 10 quality tech companies to buy that will give you 20% return each company over the next 12 months. So
yeah, to say that it has been disruptive, tumultuous, uncertain, volatile is an understatement, because as investors, especially retail investors, I feel like we've almost lost control. It's the Fed that's been making all the decisions with our money.
But having said that, if you sit tight and understand clearly what you're buying, if you can just sit tight for 12 months, there's no panic. The problem in today's investment market is investors want results quick in the next 1 month, in the next 2 months. It cannot happen this way. That market is gone because the Fed is holding control, that you said. You cannot see the market go up in 1 and 2 months.
I started off by saying that Bank of America said there's this migration into tech stocks. And then you say there is managed funds, staking funds, and
Yes.
quality names.
Yes.
So I think this warrants a conversation with you. I mean, a real serious investor who seriously wants to make profits must get on the phone and talk to you about these
no
options.
Hype. Yes, no hype.
Because I cannot even think of anything that is this good.
Yeah, you see, 2.25% per week, and then you get 20 to 30% a year. It's the best of both worlds. We have made it into a hybrid because we understand what's happening. We understand what's happening.
So, I mean, the regular guy would say, like, are you sure? And then you're going to tell us.
Please talk to us.
Okay, so how do we call you?
Well, my address is bit.ly/algotrader, where you'll land on our WhatsApp page, because our website algomasters.com is under construction. That's why we're giving you an address of WhatsApp first, bit.ly/algotrader, and we will elaborate to you exactly how we do this and how you can participate. And I stress, the managed fund does not trade stocks, only FX and gold volatility. So it differs. So why we have done this, because it's the best of both worlds.
You see, and it's regardless of market direction.
Correct. Because the managed fund is managed by professional investors who will trade volatility, not market direction.
Okay. Thank you, Ashwin. So do get on a call with Ashwin to find out how this is done. Right?
Yes. bit.ly/algotrader.
Okay. Thank you, Ashwin.